The bottom that I had predicted on January 9th and 10th for the following week did happen. And again, we bottomed on the Monday the 13th, January 13th. And I told you I thought a bottom would happen that week. And seen that happen. I told you I'm expecting new all-time highs. Told you I didn't know if we get a pullback ahead of the new all-time highs or go at first. We did that today. We hit new all-time highs. Again, I remain bullish. We're probably going to get a pullback at some point. The charts. Again, I think we have the continuation of the election rally that we talked about at the November lows there. We got that rally I told you was going to happen. It did, and we've now filled the gap. I think we're going to continue. And again, I've been talking about that. I'll show you the charts. Stay tuned for that. Now, it's amazing. The S&P is doing exactly what Bitcoin is doing. I'm going to maybe show you the chart because it is amazing. Bitcoin moved to a new high, turned off of it. The S&P just moved to a new high, turned off of it. They're selling off in the after hours, by the way, but it is following Bitcoin. And if you want to see my latest Bitcoin video, I'll link it at the end of this video. It's pretty remarkable. If you don't like cryptocurrency or Bitcoin, it is fascinating to watch the correlation between the two. Now, the Dow was up 131 points, up 0.30%. It's holding above the 44,000 area. We got above that level yesterday. Big rally, again, it was the Dow. One of the reasons why I believe that we predicted the bottom, one of the reasons why I thought we bottomed last week and predicted it happened last week, one of them was the Dow and the Russell. And then we saw the Fear Greed Index, and I showed you that, and I just laid out my case. Signals were correct, and now we're going back up. S&P up 0.61%, up 37 points, still holding above 6,086. We went to a new all-time high above 6,099 today, and we moved above 6,100 and then turned off of it. That's exactly what Bitcoin did. It went up to a new high and then turned off of it. Very interesting. NASDAQ was up 1.28%. The Russell was down 0.60%, and the VIX was up just above 15 now, up just over 0.25%. You know, it's absolutely incredible. The stock market is following Bitcoin's lead, and Bitcoin and the S&P are doing the exact same thing. Bitcoin and the S&P both set up head and shoulder patterns. I talked about this at great length in detail. Expecting Bitcoin to bounce off of this trend line from 2024. I was expecting the S&P to bounce off the trend line from 2023. They did. Bitcoin came down to this level, it got a bottoming tail, and it rebounded back up. They both had the head and shoulders evolve into bull flags outlined here in blue. They both bounced off major trend lines surrounding the 100 period moving average. They both broke out. Bitcoin got an immediate back test, but it went up to a new high and then is now turning off of that high once again after doing it the very day of Inauguration Day, giving back an 8% rally on Inauguration Day and just being up 0.89%. See a bigger pullback for a back test with Bitcoin or Fibonacci retracement, but Bitcoin or not, they're doing the exact same thing. It is pretty remarkable. Both of them, I think, are going to go up to their upper channel lines, as I've been talking about. Link my latest Bitcoin video at the end of this one, and you'll see what I'm talking about. It's pretty amazing stuff. I think both of them are going to complete the blow off top, but just at a little bit higher levels. Bitcoin had moved to a new high on Inauguration Day. S&P did it today. Both broke out of the bull flags ahead of Inauguration Day. They both had an election rally and likely continuing the election rally surrounding Inauguration Day here. Absolutely incredible. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you could take a moment to do that, I would really, really appreciate it. Just follow the link below. It'll take you to a secured site. You can donate any amount you want. Just do that rather than trying to sell you things with sponsors, because I don't choose to do that. Take a moment to help me out. I would really, really appreciate it, and support the channel. Thank you for your consideration for that. Again, the Dow and the Russell, they helped us predict the bottom, which was predicting before it bottomed the previous week here, January 9th and 10th. Bottomed on the 13th. These divergences helped me do that. Like the divergences helped us call the December top. Now we're coming back to this trend line right here, and I include the shadow right here. We're right at that trend line. So again, we'll be watching to see if we get a pullback in the market. We had a wide range bar followed by this candle of indecision, this doji looking candlestick. And again, we'll see if we get a pullback, Dow and the rest of the market. If we do, again, these MACDs are moving into positive territory now. I think they're going to stay there. And again, the Dow still could move to new highs and form a larger divergence, the confirmation of a lower high. But we've had a pretty powerful move up. And again, it might diverge with the transports, the Dow making a new high and the transports not. So often is the case. We got the S&P hitting the upper Bollinger Band. We could see a pullback. Backtesting now. S&P is hitting overhead resistance, moving to a new high. The Dow is backtesting that trend line. I warned you the S&P was bouncing off VWAP support and horizontal support. We were just above it there, this blue rectangle area. Now we have support in this area right here at the VWAP and the slow, but we've come right back up to resistance. So as the Dow's backtesting the trend line and the Nasdaq's backtesting a trend line, we've come up to overhead resistance here on the S&P. And again, maybe we go a little higher, whatever. Again, I'm not trying to be a day trader and call short-term price fluctuations. I'm looking at the main movement, but that's why I thought we'd have a bottom here. I thought we'd have a top over here at resistance, divergences, and again here, resistance. So we'll be watching to see if we get a pullback. But even if we go higher, I do expect a pullback, and it's probably going to be a back test of the bull flag pattern. You see the resistance right here highlighted there in that pink shaded area. Now quickly, if the S&P gets a back test, it's coming here and hitting this peak right here, horizontal resistance. If we come back to try to fill some of these gaps or back test the bull flag pattern, well, guess what? You could fill the gap from the breakout. You could fill the gap from the breakout here just ahead of inauguration day on the 17th right there. We got a doji. I told you it was either a candle of it was a candle of indecision, either a continuation or a pullback candlestick, one or the other. It turned out to be a continuation. The continuation of the rally, it makes it more likely we're just going to get a more shallow retracement and probably just backtest the breakout of the bull flag. The filling of the gap here, breakout of the bull flag ahead of inauguration day, could be coming into play around 59.38, filling this gap and backtesting the trend line and coming back to the moving averages. It might be up at that area around the breakout point here or above the gap fill here by the time we reach it and just overthrowing the moving averages a little bit. Right now they're right at that gap fill area. The 10 is just under it and the 20 is just above it. Could move back to the 10 and 20. Now the 10 and 20 are still, they still have a bearish cross and they're still below the 50. So again, there's probably more work to be done that we get some kind of pullback and allow for a bullish realignment of the moving average trio, the 10, the 20, and the 50 period moving average. I think we'll see the momentum remain bullish here. I don't think we're going to take this level out right now. Currently is at 58.67. Don't think we fill these other gaps. Here's the CPI gap right here and the gap down here higher on the CPI data. We did that on an intraday basis, but I don't think we're going to fill the CPI gap necessarily. I think we're going to likely backtest, and I think the push to new highs, new all-time highs, is suggesting a more shallow retracement than something uglier. Start to turn, I'll be looking at the Fibonacci retracements. If I just draw them in roughly here, just eyeballing it, again, if we turn, if this marks a peak and a short-term double top peak, I do not think it's a double top pattern. I think it will be claimed that it is, but I think it's a likely a back test. Again, this gap fill area is at our 50% retracement, 59.38 or so. If we back test at a 50% retracement of the advance, or if we get a 61.8 Fibonacci, we're going down towards the 5,900 area if we take our time in reaching this area. So we'll be watching if we get a back test of the bull flag pattern, but I don't think you're going to take out for boundary of the cloud. I think momentum will remain bullish, and I'm looking for a possible wave 2 pullback in the larger fifth minor wave. We have the Awesome Oscillator, the MACD going positive. We have the Awesome Oscillator going positive. So again, I think momentum is likely to remain bullish, but I do expect a pullback. The bottom and the rally that I predicted has happened in the new all-time highs, which again, I told you I didn't know if we were going to pull back and go to new all-time highs or just go on and do it. It could play out either way. But I do think we're going to get a pullback here, and maybe we end up going higher before the pullback. We'll see. But again, just looking at the Fibonacci's from this move here from a week and a half ago, things played out according to plan. At some point, we're going to get a pullback. The rally and the bottom that I anticipated and predicted would happen has happened. I remain bullish on the S&P 500. Now, the S&P 500 60-minute chart predicted the rally that we're having right now. This is what I used to call the bottom. This is why I told you we were going to go a little bit lower and fill the gap down here from the presidential election rally that we had. I told you we were going to go and hit that 2023 trend line, and I told you I thought we'd bottom and rally up to new highs. And now, I told you here with this rally, I didn't know if we were going to go to new highs and pull back or go to make a lower high and build momentum and pull back and then go higher. I told you what I thought because I have the guts to tell you what I think, and very few people do that. Most people predict things after they already happen. I tell you what I think before it's going to happen. I tell you other scenarios. I told you I thought we would get the rally. I told you I thought we would bottom. That was correct. But I told you I thought we'd probably get a lower high, but I told you it could play out either way. And when I'm not sure, I tell you it could play out either way. I told you with the triangle over here, it could play out either way. I'm trying to predict the main movements, not short-term price fluctuations. Using that based on moving averages, support and resistance, adequately based indicators, and looking at probability. Again, called the December top correctly, called this bottom correctly here in January, called the November bottom correctly, and again, have done a pretty good job calling the tools using the 60-minute chart. It's done an excellent job. So again, as I said, now that we've had the bigger move off of the breakout here, I think that we could just pull back, and it could be, again, like Bitcoin did, it made a new high, could pull back. It did that already. It moved to a new high, and then it pulled back. Bitcoin still may get a bigger pullback. It already back tested. It could get another back test, but the market is pretty much following Bitcoin's lead. And again, both the S&P and Bitcoin, they both set up head and shoulder patterns. I told you they were fake out patterns. And then everybody got extremely bearish. And I told you we were about to bottom and hitting that trend line from 2023 and filling this gap. I told you we were going to go a little bit lower and likely fill this gap and bounce off that trend line. Exactly what happened. We'd eventually move to new highs, and it's not done. We're going a lot higher. We're going to be calling for a double top if we pull back now, but we're probably just going to back test this bull flag pattern, probably come back here and try to fill the gap from just before there on the 17th, the breakout on the 17th, the day before the inauguration day. Again, as I've said, I believe we have an extension, continuation of the presidential election rally here. Again, I told you about the bullish divergence here. We're at the 50 period horizontal support, bullish divergences, and I told you we were going to get a rally ahead of the election and the Fed. We did. We pulled back to gap support, and then we continued the rally to the December high, and then signals warned we were going to get another sell-off. We talked about that. We corrected sideways, and then I talked about the triangle. We had the breaking up or down, and we got the Fed disappointing. Market reducing the amount of rate cuts from four in September down to 2 in December. Told you again the head and shoulders is a fake out pattern. Everybody got bearish right before the bottom happened, and with the bottom as it was forming, I told you the market would likely bottom at that trend line and at this gap fill area. And I told you again, if the S&P gap down to fill this area, the Russell would likely hit the 200 period in the trend line and bounce off of it. And that is exactly what happened. And I talked about the bullish divergence on the fear greed index. I talked about the Dow and the Russell trying to rebound back up because they've gotten very oversold and hitting some key support levels. True, the indicators of warning why we're about to get a bottom. And now I've been warning over the weekend, warning you with my first video about the bottoming in the previous week and a half there, week of the bottom, and then prior to the bottom. And I'm also warning you about the top that come in. I think this is probably the first leg up of minor wave 5. And I'm going to be looking for wave 2. And we'll be watching these gaps very closely. A lot of gaps. This is the breakout point right here. And if we come back to fill this gap, to fill the gap of the breakout point right here at 59.38, you can get a back test. Maybe we go higher and then do it. Maybe we do it immediately. But I'll be watching to see, do we get a back test here of this breakout, back testing the bull flag? I think that is highly likely. And based on probability, I think there's a pretty good chance that's the case. So again, the fact that we've had the breakout, I think it's more likely we get a shallow pullback rather than a bigger pullback that goes back into the trading range of the pattern and filling some of these other gaps I've talked about. Correctly called the bottom off the 2023 trend line. Correctly predicted the rally. Correctly predicted new all-time highs, although I did tell you, again, I thought we'd pull back. We're making new highs, but I told you it can play out either way. I'm not trying to call short-term price fluctuations. I'm looking at the main movement, which I think is minor wave 5, the whole thing as a whole. Now up at extremes, again, we'll probably back and eventually go higher and see a divergence begin to develop, and it'll probably end up being a triple divergence that ends up developing here as we get a pullback. Wave 3 should follow the wave 2, and then again going on up into wave 5 into some of the target trend lines that I've been talking about. And I believe we are now in the continuation, as I've been predicting, of the election rally with Inauguration Day took office, and Wall Street likes President Trump's policies. They can't stand his tariffs. Delayed the tariffs to February 1st. So again, the market like that. See what happens with that. Wall Street's expecting it's not going to be as bad. Hope that maybe they won't be implemented and that there'll be time to prevent them from being implemented or not as bad. So we'll be watching to see what happens. Again, eventually, I think part of the top will be an inflation freakout. Maybe the tariffs might be part of that. And the Fed and bond market and all the experts, they're all freaking out about the tariffs. They're inflationary. We had the tariffs before, and we didn't have inflation. It's the government and the Fed that gave us the inflation. We need to look in the mirror that could be part of the narrative of the freakout for inflation. And again, we'll see what happens. The 10-year yield is trying to bottom out and rise. And again, could see that give us the next pullback as it currently has a negative correlation with the market. And we've got the negative diversion still developing here on the histogram. So I think we're going to roll over. I think we're going to probably get a back test. And then I think we're going to resume the advance. I think that'll be wave 2. I think wave 1 is going to complete here at some point, maybe a little higher, maybe right around here. We'll see what happens. Looking at the main movement, not a short-term price fluctuation. And I told you, again, we might get an overthrow yesterday. I told you we might get an overthrow of that upper boundary. That has now happened, and maybe the pattern is expanding. We'll see what happens. But it is pretty parabolic, as it was over here with the election rally off of our bullish diversions there, just like we had it over here, which we talked about all of these things before the rally ever happened and predicted the bottom the day before that it happened there. January 10th, and with the 9th there right before that, I think a bottom would happen the following week. Again, I am predicting we're going to get a pullback. I'm telling you, I think it'll be a higher low. I told you I thought we bottomed here. I think we're going higher. Now, the narrative when we sell off is, we're going to have this double top, and again, it's likely we are going higher. Negative diversions on the 10-year yield. I use this to help me call the bottom for the market, help predict it with this trend line into the resistance zone. Could go back up and get a lower high. Still possible we get a double top out of this with the peak over here. But again, like I said, it's either going to top here or up at this 5% area, start dropping, and eventually the stock market is going to join it. We'll have the return of a positive correlation. Divergence is here. Again, allowed us to correctly call that bottom in the market. It's possible the 10-year yield has peaked. That's very possible. Daily chart, I have two trend lines that I'm watching. And again, I think we're going to pull back test the breakout of the bull flag, and just draw that in here so you can see it. I think we'll throw back to this area, back towards the moving averages. We'll eventually get the 10 and the 20 back above the 50 and eventually move up towards this trend line or the channel that I've been talking about. These are the daily targets. And again, they come very close into that weekly trend line, the weekly trend lines that I'm looking at longer term and from 2022. But again, I think we're going up towards the 6340 to 6400 area. My trend lines are the target, not a number. Longer to reach the trend lines, the target will go higher. You got a shot, as I've said, a peak happening late in the fourth quarter, which was December, or on into the first quarter here, January. And I said if it didn't happen in December or January, which again, I told you over and over, I don't think the December top was it because I think it's a wave 4. I think we're going to get wave 5. I told you if we didn't peak in January, that again, this can go on into the first quarter because again, over the last 11 weeks, we never did reach the trend line in the weekly time frame. And again, I think that the bull flag is a wave 4 and it bought us a little bit more time. So I'm looking at this trend line right here on the S&P 500. And eventually, I think we're going to go up to reach that, maybe overthrow it, which is a large rising wedge. This is a 2023 trend line that I told you I thought we were going to bounce off of, filling the gap over here, which we did do. I told you those levels with the trend line on the Russell hitting the 200 period, I thought we were going to get the bottom. Your greed index and all the other things that I talked about were quite a few things. Us off to the bottom. Watching this trend line closely, and again, I'm going to be looking. Do we get a 5-leg push going into this area? Or do we exceed it and get a 5-leg push higher and go up to the channel line that I've been talking about, which goes back on into these highs over here, something like that, which again, I didn't draw that very straight, but something like that, and I'll show you on the other chart. So again, does it go higher, or do we, again, go into that July trend line that we've been turning off of in November and December? Do we go up and hit it again? Good chance that could be it. And I'm becoming more and more convinced that maybe this is the trend line that's going to mark the top here, and it intersects beautifully with the trend line of the channel on the weekly chart. Now, again, above that, we have another trend line on the daily chart, and I'm trying to show you both. I'm leaning towards this one, but we can still go higher. By the way, when we were turning off this trend line and when our signals had formed little divergences at the December high, I got attacked by the bulls. Tell me, no, there's no, I was telling you, again, the divergences on the Dow and the Russell were telling us we were going to get a sell-off. And then the S&P went sideways. Triangle on the S&P broke down, telling us we were going to get an even bigger sell-off. Bulls said, no. And then they got very bearish down here. And I told you we were going to bottom. New highs today, which I've been predicting, happen, and people are telling me, no, there's no way that's going to happen. Now it's happening. Again, we're in wave 5, minor wave 5. Going to these targets I'm talking about. As the bulls attacked me up here, telling me there's no way we're going down, and attacked on social media, well then when I was saying a bottom's going to form the following week, attacked by the bears. Tell me, no, the top's in, and now we're here at new highs. And they told me, no way we're going to new highs, and here we are at new highs. I told you what happened. Absolutely incredible. And my signals have done a pretty good job of calling these short-term turns in the market. I haven't been perfect. I was late calling the August bottom, a few days late there, because again, my signals flipped back to bullish a few days after the low. Called these other turns though. The turn here, called the day of the bottom here, called for the breakout and a Fed rally here, given us all this, called the pullback here correctly, called the bottom with the higher low here on the triangle, called the top here for the triangle correctly. With the triangle right here, I was expecting a continuation to go higher. I was wrong about that. We went down to the 50 and the horizontal support. I called another bottom. I was correct about that. Got the election rally and the Fed rally correct. Called for the November sell-off here correctly. Called for the higher low here. And a lot of this was the 60-minute charts and the 15-minute charts in these turns, but calling the bounce with the higher low that came over here and then calling the December top. And right here at the triangle, I told you I thought it would probably continue. I thought the wave 4 was possibly a triangle, but it evolved into a larger sell-off. Wave 4 and a larger ABC move. Sometimes you get triangles, but again, I told you it can break either way. And again, my signals continue to remain bearish. Then I called the bottom here just this last week, called that correctly. So again, my signals have done a pretty good job. And then here, the new all-time highs, calling that correctly, predicting that. I've been perfect. I was late on the August bottom. I predicted the breakout of this triangle, and we went down, but I got the bounce here correct, and the rally I was expecting happened afterwards with the presidential election. And then right here, I was expecting an upward resolution. Signals remain bearish. We had a downward resolution of the triangle, which I warned you could happen. And again, those are the mistakes that I've made. The other things, correct, calling the July peak, the September peak, the August peak, the September bottom, continuation triangle, the bottom before the election, the higher low at gap support, December top, and now this bottom right here. I predicted this counter trend rally right here to get the backtest of our previous rising wedge, which again, the rising wedge could be evolving into that larger rising wedge, which is this boundary right here, or again, a possible channel if we exceed this level. Again, I remain bullish. I predicted that we would bottom and that we'd rally, and we're going to rally up to one of these trend lines right here. Now here I've drawn an Elliott wave count. This is minor wave 4 completing, and why I told you the head and shoulders was a fake out. It measured down to the 55, 60 area beyond the 200 period currently where it's at. But if we get a pullback to the bull flag, again, you could have a wave 1, a wave 2, a wave 3 up in here, 4 and 5 if we go up to this trend line, or shorter than that we looked at a moment ago, that would be a little bit lower, where we would come back, that we come back like that and stall somewhere on this red trend line from the July peak, which is the upper boundary of that large rising wedge. And that intersects with that channel on the weekly chart. But like I said, this may have a overthrow, and rising wedges have overthrows, so we still may reach this level right here. So we'll be watching that. And again, we still may go higher. I'm predicting we'll get a pullback, but again, a short-term price fluctuation. Again, it starts here immediately. Maybe we go a little higher and it starts. I do expect it's going to happen, though. I'm looking at the main movement. I think we're going to get these 5 subwaves in to complete minor wave 5. That's going to complete this whole thing of the intermediate count, which we have over here, wave 3, wave 4, and this whole thing's 5. And that's going to complete this 5 with the circle there. That's going to complete these 5 intermediate waves off the low. That's going to complete primary wave 5. That's what I think is going to happen. And that's why, again, a lot of flack for saying, hey, this is a corrective ABC move and we're going to go to new highs. Turns out I'm correct. Correct about the bottom, correct about the rally, correct about the new all-time highs. I'm going to be correct about a top up in this area. Again, the presidential election rally. We have a continuation of that now starting, and I think it's going to complete up here somewhere. Just how long that takes, again, probably somewhere here in the first quarter. Like I said, again, had continued to say you got a good chance of seeing a top in December, January, or on into the first quarter if you don't see it with December and January. Now, again, the correction buys us more time now on into the first quarter. Failed to reach our target levels in the weekly time frame, which is the trend line, the blue trend line right here, and the upper boundary of this larger channel. Okay, and again, here's the primary waves, by the way. Primary wave 3 was the 2022 top. Primary wave 4 was the bottom here in 2022. And primary wave 5 is right here. This is what I think is happening. As I've said, I think we've got this 5-leg push higher, and I think we've got these 5 minor waves going on. This is where I think we're eventually headed, and we go a little higher like what we did over here in 2022. Not that we reach that other channel line in the daily time frame, but this upper rising wedge, this black rising wedge here, that is that red trend line on the daily chart that I've shown you, intersects very nicely. Now, again, when we reach this level, I'm not Nostradamus. I'm telling you, I'm just a trader looking at support and resistance, okay? And I'm looking at these trend lines, and we failed to reach them over the previous 11 and a half weeks. I think it's likely we're going to reach them in the first quarter. Because we failed to reach them and we had the December-January sell-off, it buys us more time. A number is not the target. The trend lines are the target, and we have failed to reach the blue trend line. We turned off at the December peak of this trend line. We did not turn on. We didn't reach that blue upper channel boundary. I thought the RSI would firm up, and I thought we'd get another divergence right here. And again, this may happen quickly over a couple weeks. It may drag on out into February or March. I'm looking for this minor wave 5 to complete, and I think when it does, and now we're moving to new highs, I think we'll go much higher, but we'll probably see some kind of pullback for maybe a wave 2, digest the gains, and then resume the advance. So wave 2 is done, we'll get the parabolic wave 3, and again, eventually make our way towards this area. You're probably going to top. I think you got a good shot of that in the first quarter here. Dow's had a big move up, powerful move back up. Again, the Dow is one of the reasons why I told you we were going to bottom out. It had the divergence going on here with the RSI. And again, the Dow's got a candle of indecision now. See if we get a pullback. T up close here has a similar candlestick. And again, look at the MACD. I believe the MACD will eventually make its way. And even if we pull back, I think it'll remain positive. It's in positive territory now, but I think it'll stay in positive territory, eventually make its way back up here. And I think you're going to get a massive divergence here, at some point. Maybe it's more like this. Maybe it drags out into late February or on into March or something. Who knows? But again, I think this is going to complete a divergence on the S&P 500 near the levels that I'm talking about. Those trend lines of resistance. See if we come back and fill some of the gaps. We'll see if we back test the bull flag pattern. I think is likely. NASDAQ's up, back testing this trend line yet again. We broke down from it, and again, we're testing it once more as we did over here. We broke down and we back tested it. It also broke out of a bull flag pattern. We'll be watching to see if we get a pullback off of this trend line or not. Again, to see if the NASDAQ goes sideways or gets a bigger correction, if it ends up diverging with the S&P or if it ends up moving to new highs. And again, it can do either one, as I've said. The MACD getting that bullish cross and moving back into positive territory, and two, like the S&P, may end up forming a bullish or a bearish divergence or confirmation of a lower high, one or the other. And the only reason why I say that is because sometimes NASDAQ diverges with the S&P, and we've seen some distribution with tech, and there could possibly be rotation moving away from tech and the other averages going higher. Well, tech doesn't. We're paying attention to. Again, NASDAQ still may make new highs. This blue channel right here, again, the July peak may come into play, but we'll be watching if it stops making new highs or does it eventually join the S&P. The S&P is making. Now, again, NASDAQ had back test as well, and the bull flag that we had, and still go higher, or it might just chop around like it did in late 2021 on into early 2022 as it diverged with the S&P 500 back at the 2022 top for the S&P. Watching, we filled the gap right here. We still have another gap fill up here. We may go to new highs and eventually fill that gap. Still have a rising wedge here, very similar, and again, similar to the S&P 500. Parabolic rise ahead of Inauguration Day, just like what we had ahead of Election Day, again over here. It could be a continuation of the election rally as I expect. The question is NASDAQ going to join the S&P and make new highs? So again, the bullish divergences help us correctly call the bottom here on the 60-minute chart for the NASDAQ and the S&P. Watching, do we get back tests with both of them here on these 60-minute charts? NASDAQ never did fill that election gap rally. The Dow, the S&P did.